talk to you today about your tax bill. A lot of people in South Carolina, if you have not received your tax bill, you'll be receiving your tax bill in the next couple of weeks. So I kind of wanted to go over what you're looking at so you can understand exactly how this property tax bill works. And it's for your house or your land, but it's not for your car. It is to show you the difference between what you should be paying and what you may be paying. So I'm going to start right here. This is your appraised value. And on this particular property is $65,410. Well, you want that appraised value to be less than your house is worth, because you do not want to pay taxes on your house's true value. So you always want this number to be lower than its actual market value or what you could sell your house for. The next item I want to bring to your attention on this tax bill is the 6. If you live in that property, it should say 4 and not 6. This is actually one of my tax bills in a property that I don't live in. So it's being taxed at 6%. But yours should say 4%. If it does not say 4%, then that means you have not registered your house with the county wherever you reside. You need to register your house with the county by taking your driver's license, your car registration, and I would even take a utility bill to verify that that is your primary residence. Also, if you're married, a lot of times they are going to want your spouse's information, or if you have another person on your deed, they may ask for that information. But initially, I would just take your information and make sure that you get the 4% tax rate. I wanted you to see this one that's at 6%. This value on this property is $65,400. Well, the taxes are $1,754. It's not just a 2% difference if I live there. If I lived in this property, my property taxes would be only about $400. So it could triple to quadruple if you do not register your house as your primary residence. So because this formula is not just multiplying it from 2%, the 2% difference, they take a millage calculation, and it's a big, long, drawn-out formula where they get this higher amount. And you do not want that to happen to you. Also, if your taxes and insurance are being escrowed into your payment, this will make your house payment go up. If I lived at that property and my tax is only $400, then my taxes on my house payment will only be less than $50. But on this one, it would be over $100. So it could send up your house payment if you don't get this corrected. Also, in the state of South Carolina, they will give you what they call a homestead exemption if you are 65 years old, if you are totally disabled. So some of our veterans would apply. This would apply to you if you can get some kind of federal government agency to tell the county why they shouldn't be taxing you at this rate, or to give you the homestead, then you could get it cheaper. And just to give you an example, if I were 65 or if I were permanently disabled, instead of me paying taxes on $65,410, they would remove the first $50,000. So I would only be being taxed on $15,410, and in some cases that could reduce somebody's tax bill to zero. So you may not, even if you don't own a house, or if you have an elderly grandparent or somebody that has a house, this could save them a lot of money, and you could get a lot of benefit for an elderly adult, because this could save them a lot of money. You don't care what the value is here. You always want that to be lower. Now, if your value is higher and you think it should be lower, you can do an appeal. And there's a form you can fill out for an appeal. And if you bought a house from Erica Homes in the past, we will do the appeal for you for free. You can contact our office and we will fill out the appeal form for you for free. And if you think that you should have an appeal, or you're not sure, we can look at your tax bill and look at your property and give you an estimation as to if we think that you should file the appeal, because if you're taking a chance that if you file the appeal and they reevaluate it, then your tax bill could go up, and that's a chance that you're taking. But most importantly, you want this number to be lower than the market value, and if you live in the property, you want it to say 4 and not 6.